What's going on, guys? Today we're going to be talking about utilizing the VA loan in these certain states because it's different if you are married. And no, I'm not saying don't get married. I'm just letting you know that there is some things that you need to be aware of, especially if you're thinking about getting married and then using your VA home loan, or should you use it before? Or if you're married, PCSing or moving to this state, or you want to retire to these states, you need to understand how your financial structure is going to impact using that amazing VA home loan. So today I'm going to break that down, and I'm also going to give you some information about how veterans get denied in these states when they actually can be approved. So there is some things that are going to be covered in the VA Handbook. So first, let me tell you guys which states are going to be in it. And before we get into that, if you guys don't know, my name is David Piatek. I am a loan officer and able to help you use that VA home loan and connect you with the right people. In the description down below, you can schedule a call with me. So let's go over the states. So Arizona, California, Idaho, Louisiana, Nevada, New Mexico, Texas, Washington, and Wisconsin are called community property states. So let me show you guys in the VA Handbook where the information lies around how this program works. Because essentially, okay, the main problem that veterans have is they will apply for a VA home loan by themselves, and they want to buy in one of these states. But then we request information from their spouse, like being able to look at their credit report, and they're like, why do you need that? And all of a sudden, everything stops. And this is also why we're creating that video, just because there's so many questions around that. So first thing we're going to talk about is going to be the spousal income and community property state. Now, I'm going to read this through because I know this may be small, and I'm also going to explain it. So in this space for spousal income, so verify and treat the income of a spouse who will be contractually obligated on the loan the same as you would the income of a veteran borrower, which is really good because the VA does have pretty loose requirements for that. Now, borrower that will be obligated on the loan. However, to ensure compliance with Equal Credit Opportunity Act, do not ask questions about the income of the borrower's spouse unless, okay, this is going to be the key. So again, spouse will be contractually obligated. Borrower is relying on spouse's income to qualify, because sometimes people will be like, well, can I use my spouse's income without putting them on the mortgage? And you can't do that. So this is why you'd put them back onto this. Now, it can be considered, this is technical, as a compensating factor on a manual underwrite, but we typically don't see that too much. Borrower is relying on alimony, child support, or separate maintenance payments from the spouse or former spouse. You do provide documentation. And borrower resides and or the property is in a community property state, right? That's the big piece of that. So in community property states, information concerning a spouse may be requested and considered in the same manner as for the borrower, even if the spouse will not be contractually obligated to the loan. So see topic 5, subsection A, which we're going to cover of this chapter for additional guidance for community property states when considering a spouse's debt and credit report. So this is pretty big. So this is basically what it's saying. If you are a sole veteran purchasing in, let's say, Wisconsin, you're the only one on the loan for the VA home loan, and let's say you qualify for the VA loan, right? You meet the residual requirements. Then you have your spouse that's not on the mortgage, and let's say they have a 500 credit score, a bunch of collections, lates, and they have huge, racked up debt. Now that's going to count against your qualification on your VA loan unless they can prove something. So I'm going to show you, and this is where a lot of veterans will get disqualified for the VA home loan because a lender doesn't understand this. Now, this is just a quick snippet on joint tax returns, right? So if there are losses for business income, then no matter if you're in a community property state or not, then those will count against you. So again, I'm going to link this down below for the VA Handbook. You guys can check it out yourself. All right, so this is going to be more of an in-depth approach to the community property states, all right? So the Equal Credit Opportunity Act prohibits requesting for or consideration of credit, history, and liability information of a spouse who will not be contractually obligated on a loan, except if the borrower, again, is relying on alimony, child support, or maintenance payments from the spouse or former spouse, or in a community property state. Now, this is where you're going to be able to get some of those outs that I was talking about a little bit earlier. So if either of these situations is applicable, the lender must, all right, community property state, obtain a credit report of the non-purchasing spouse in addition to the veteran's credit report. Now, the way we do that is we pull on the application, we take a look at the veteran's credit report, and then we do another separate credit report for the spouse, and we put that in the file, and then there's consideration. Now, consider the spouse's credit history in reaching a determination, right? This is why it's important for both, when you marry, well, I'm not giving, this isn't a marital advice channel, but this is why it's important to budget and understand credit from both sides, especially if you have a partner, so where you stand, especially if you do move to one of these states, because it's going to affect what you can do. And sometimes people will be strategic. They'll be like, hey, I'll put everything on my spouse for all the debt, so that way I don't have it on mine, so we have flexibility when it's time to buy. In these states, it's going to backfire. A veteran borrower with a satisfactory credit history may be considered a satisfactory risk, even if the non-purchasing spouse's credit history may be unsatisfactory. So what that means is that let's say this is pretty straightforward. So you have a 780 credit score. You are easily qualified for the VA loan. Spouse has a 500 credit score. Let's say 450. Someone technical might come out and say like, oh, there's a minimum credit score for VA loans. That's true, but then you may be downgraded with a lower credit score to a manual underwrite. I did a whole video on that and explaining it because there's a lot that goes behind that, right? So in this case, it might downgrade it, higher rates, higher fees, all of that fun stuff. But in this scenario, they're saying that, listen, the veteran's still good to go. The veteran can support the debt of the spouse. Okay, now we're still good. And again, it's going to be at the lender's discretion. This is why you may go to one lender and not qualify and go to another and qualify, depending on how they look at it. Now, here it says, this is what I talked about earlier, include the monthly payment of the non-purchasing spouse's debts. There's a VA form that we use for a loan analysis to basically get your residual income for you to qualify. For debts such as judgments and unpaid collections, lenders should consider the veteran's capacity to address the debts. So that's a pretty important factor, right? This is where those payments come in and they could derail a transaction. So develop the facts surrounding any unsatisfied judgments on the spouse's credit report. This is also important because judgments typically can be tied to a property after you purchase it, so you want to really consider that when you're going through that. All right, such as where the judgment was filed and whether the parties were married to another at the time, and secure a competent legal opinion whether the judgment may become a lien against the property. So that's the biggest part. Now, this is going to be the biggest kicker for a bonus item, I would say, where a lot of veterans will go into these community property states. They'll get denied, but then the lender misses this exact verbiage. So exclude the monthly payment of the spouse's debt from the loan analysis when a reliable source of income for the spouse is verified to reach a conclusion in which is voluntarily provided. So this is this voluntarily provided. I like that. Right. So the lender may ask, right, the spouse to say, hey, look, or the veteran to say, look, in order for us to offset this debt and for you to qualify for the VA loan in this community property state, we need to verify your spouse's income. And they would then provide, hey, this is my income, my W-2s or my self-employment tax returns, whatever the case may be. And then they would be able to offset that debt, which is pretty important. It is a pretty big deal because I do get a lot of calls from veterans where they're like, hey, my lender denied me because I'm in a community property state and my spouse's debt. We get talking and they're like, yes, my spouse does actually work and has a job. And I'm like, well, why don't they offset it? And that's something we've talked about in the past, that the VA itself is pretty loose on its requirements for veterans to utilize that beautiful VA loan. Lenders may have overlays. Investors may have overlays. That's the big back end of the banking system that you guys don't see, which I talk about because I want you to know why things work the way they do. So I'm happy to help you. We can help you in these states. And down in the description, you can schedule a call with me. And I encourage you to schedule a call, not call me, because if you call me, then it's kind of playing a game of phone tag. But if you schedule a call with me, at least you're going to for sure talk to me. So please hit the like and subscribe button. Let me know in the comment section if this has happened to you and were you able to overcome it or what the outcome was. And I'll get you on the next video.